purpose of performing an audit is expressing an opinion on the financial statements, and this is an unqualified opinion. Basically 4 different kinds of opinions that can be given, and this is the unqualified is the highest form of opinion. Basically means that during our audit, during our review, we did not encounter any matters that would lead us to qualify our opinion in any manner, and also that we were given everything we asked to examine. If you look at that second paragraph on page 1, in that first sentence it says, we conducted our audit in accordance with auditing standards generally accepted in the United States of America. What that means is that we have rules and procedures we must follow when performing an audit, and we're stating here that we did follow those rules and procedures. In that third paragraph, that first sentence, it says, in our opinion, the financial statements referred to above present fairly in all material respects. This financial position of the Wilson County Appraisal District as of December 31st, 2011, and for the year that ended. So it's a good, clean, unqualified opinion. And next, if you would, let's turn over to page 13 of the report. Page 13 of the report is the balance sheet of the district. And probably the most important part would be where it says fund balances in the middle of the page. And you have there so restricted reserve for contingencies, $518,000. That's just what y'all have reserved. What y'all budget reserve goes year after year. You have reserve for tax collections at $17,945. That would be Joanne's her tax and bank account there. That would be the amount that she had on hand at the end of the year. And then unassigned is $96,688. That was the unreserved, unassigned amount. And that would be the amount that if you choose to do so, you would give back to the tax authorities. And then, so your total fund balance is $634,101. So if you flip over to page 17, it gives you kind of a bird's eye view of what transpired last year. You just notice it's on a budgetary comparison basis. That second column there is your budget, and I have the expense budget together. And that third column is your actual income expense figures, and that last column is your budget variance column. You'll note up at the top under total revenues that your total revenues exceeded your budgeted revenues by $6,900. In your general administration, in your expenditures were less than your budget expenditures by $22,671. So overall, you had a total budget variance of $29,000. You had, when you set up your budget, you budgeted a surplus of $70,125. So overall, you had a increase, or I hate to use the word profit, but that's basically what it is, from operations of $99,703. You refunded $82,067 back to the entities, so that left you an overall increase. That increase for the year of $17,636. You had the beginning fund balance of $616,000, and you add those two numbers together, gives you an ending balance of $634,000. So that's basically the long and short of last year.
Can I ask a question?
Yes.
That $99,703, that's the portion that we're going to return to the entities, correct?
Actually, the portion, yeah, in a manner of speaking, it's actually going to be.
Well, it says it returned 82,000 numbers in there.
It would be the 96,688 on page 13.
Okay.
Of these insert letters, this first one here is a management letter, and it starts out as a result of our observations concerning. That would be the management letter. By the way, I might say that I had an exit interview this afternoon with Eddie and Annette. I went over these with them. Payroll, we know that the appraisal district employees do not use timesheets. We highly recommend that they use timesheets. Administration, we noted that the appraisal district says does not have an anti-fraud policy, but it does say that you did pass one or adopt one on March the 20th. So whatever you still have to list it because at the end of the year there is no anti-fraud policy. At the top, IT department, same thing with a written computer password backup policy. And again, I guess you adopted that on the same date as the anti-fraud policy. Is under cash. There were several old outstanding checks, and we would recommend that, do several things with them. We looked at these this afternoon. Actually, there are some checks. There was one date there about 4 years ago, and it looks to me like those checks were, you wrote out some checks where you actually were refunding your surplus fund balance, but they still shown as being outstanding. In an instance like that, I would recommend that you, of course, notify. Are you the city manager or the
City mayor of Livonia.
Livonia. I'm not sure. Livonia made that one, but I would contact these people and just let them know that that check was written and has not been cashed. I'm sure they've been lost, and then I would void those checks and reissue another check. And I would use the same data as on the original check.
What dollar amount?
Pretty good at $15,000 before that.
15. It was written to an entity and was never cashed?
Yeah, there was like several. There was like, I think, City of Floresville. There's what?
City of Floresville.
Wilson County.
I went ahead. They have not cashed their past 3 years. So I don't know if that.
I'm sure it's not.
Yeah. Oh, what were the other ones?
Floresville ISD was one,
Yes,
and one is Livonia City. I can go in and I can tell you right away after the meeting.
Okay, yeah, if you don't mind.
In that tax account, there's several checks that were refund checks that have not been cashed. And again, you may want to contact these people, you know, just go around and let them know. And if you want, and if they're not around, I guess you just void those checks. And just, what I would do, I would just void those checks and just, depending upon the date those checks were written, I would just refund that money back to the tax entity.
I saw one of those that wasn't, it wasn't cashed and it wasn't reissued because they have a rollback tax that they never paid. So since they owed us taxes for other years, I just didn't redo, you know, their refund check.
But
But
a taxpayer instead of an entity. I think it was.
Yeah, but that was, yeah, but I know.
But these would be taxpayers.
Yeah, but
Okay.
yeah, these were checks issued to taxpayers, but if they don't exist anymore or they are, you know, not able to be found, then the money goes back to the entity, right? Right.
And these were not for small amounts either. These were like $100.
A couple of $100 for a couple of them, but then a couple of them were 16. One was 10.87, one was 16 cents. But then there was a couple that was one was 141 and one was 238.
I know that there's other, you know, as I go around, there's other like tax, like the county tax offices and such. You know, they'll have like a minimum amount, and it's under a minimum amount they won't approve $5 or $10. So you may want to think about that.
Yeah. Yes, sir.
Would that be just office policy or board approval?
Board
Board,
approval.
okay. Board approval.
This other letter here, same old, same old. It's a segregation of duties. It's pretty much a standard write-up for small entities. The reason it's always going to be a write-up is that the people that do the standards, they don't make any distinction between large appraisal districts and small appraisal districts. Large appraisal district being like Bear County. And what that means is segregation of duties is the standards require that you basically have a different person performing a different bookkeeping function, within the bookkeeping system. For instance, one person gets the mail, one person opens the mail, one person lists the mail, one person makes a deposit, one person takes a deposit from the bank, one person records the deposit, and so on and so forth. And of course, it would be cost-wise to have that here. But in any event, you have to write it out. And then on page 2, the financial statement preparation. What that means basically is we, as auditors, wrote off the audit report. Again, the standards, they suggest that the entities have an in-house CPA that's familiar with accounting principles. Do the audit report, and again, a lot of your smaller districts and such, of course, they can afford to have a CPA on staff full time to do that. So again, we have to list it. So. And that's all I have.
Sir. Next item is going to be the